Good afternoon, everyone. This is Jordan Johnson, one of the owners at M&M Mortgage, and I am here to talk to you today about VA interest rate reduction refinancing loans, which is also known as a VA IRRRL. Okay, IRRRL is the abbreviation there. So, what the heck is a VA IRRRL? Okay, a VA IRRRL is pretty much what we call a streamlined refinance product. Okay. The VA has this product put together for veterans who already have a VA loan. More or less, the government, the Department of Veteran Affairs, insures these mortgages on behalf of the lenders. They insure a portion of it, but ultimately, the big thought process behind an IRRRL is that the VA already holds the risk of the loan. Okay, there are better terms available on the marketplace in regards to interest rates, where the VA wants to pretty much mitigate some of their risk and also make it easier for veterans to obtain better loan terms based off where the market conditions are currently, not when they originated the loan. So, the whole premise of a streamlined loan is you're going from the VA to a new VA loan at just better terms. Okay, typically you can't have cash out on them. Again, increasing the loan balance kind of increases the risk of the loan. Okay, in addition to that, you can't change signers on it. If you had a joint VA loan before, the VA IRRRL has to be joint. Okay, the big pieces of the streamlined product is that typically there is no income qualifications on it. Okay, you demonstrate that you have an ability to pay the mortgage on time by making at least 6 consecutive payments on time, and the VA will allow you to refinance to new terms, regardless of what your debt to income ratio would be on paper at that time. Again, the VA is looking at it of we already hold the risk, and there's better terms for the people that we already hold the risk for. Okay. Another big piece is you don't typically need to have an appraisal on a VA IRRRL either. So it does save some upfront cost on completing the transaction and not needing to pay for that. In addition, it does make it a little bit easier to get the loan done in that there's not a value that's dependent or your loan's not dependent on a specific value to make it work. Okay, so the VA IRRRL is a really, really great program because it does allow veterans to just pretty much be able to get better terms when they are available if they are on a VA loan. Okay, there are a couple other pieces of an IRRRL that you got to look out for. I usually tell people somebody somewhere ruined it for everyone. Okay, the VA has a guideline in place that the loan has to break even on closing costs within 36 months. Okay, so more or less, somebody somewhere used to charge veterans an arm and a leg up front for these products, and then a couple months later they do it again and again and again. They call that churning in our business. The VA put in this guideline to prevent lenders from churning, protect the consumer, protect the veteran, and it is a really, really good thing out there. So ultimately, one thing I always tell clients is, the benefits of a VA IRRRL, you're largely going to be looking at obtaining a better interest rate and obtaining a lower payment. Okay. In addition to that, there are some closing costs on it. The VA funding fee that normally is charged is anywhere from 2.15% all the way up to 3.3% of the loan. The VA funding fee is 0.5% on a VA IRRRL. So that upfront cost is a lot less than if you were doing a VA cash out or a VA purchase. Okay. In addition to that, the other closing costs are largely going to be title company fees, maybe credit report fee, and some recording charges or transfer taxes, depending on the state you live in. So the closing costs on a VA IRRRL are generally going to be pretty minimal. In addition to that, they have to break even within 36 months, meaning if you're going to be in the home for 3 years or in that loan for 3 years, it's going to make sense on paper for that loan to be something that you acquire. Okay, so they're very, very good loans, and a lot of times they can get done very, very quickly. But ultimately, it is a great product for veterans. Regardless of the rate market, it makes refinancing a little bit more attainable for them, which makes higher interest rate markets a little bit easier to go shop in, knowing that if market rates do come down in the future, as a veteran, if you are on a VA loan, you could go ahead and grab a better rate when it is more available in a better interest rate market. Hope you learned a lot about VA IRRRLs. As always, if you have any questions about any products or programs, feel free to reach out to us here at M&M Mortgage.